All right. Good morning. Sunday, 8/11. We have a lot of tickers to run through, so it'll be 3 videos, 40 tickers each. I had to shave off a few because some of you are sending in like way too many, and I have to get rid of the ones that are least requested. Also, a comment. When you add tickers in the comment section, those don't get added. I just noticed that there were dozens of tickers in the comment section. You want more than 4? Just submit 2 forms. Otherwise, I can't go in manually and pick everything every day, every Sunday. So if your tickers are not covered, reach out during the week. Luckily, I give you 9 hours a day. Okay, so usually I start with a recap of the indices, a quick one, because I usually have another video just for that tonight. So look for that. It's like 4 minutes, 5 minutes long, and it's more important than these because all of these have to go inside of what the indices do. They're not trading in the vacuum. I'll start with Apple because, in fact, what's going on with Apple, everything I say about Apple applies to anything else. S&P, QQQ. So Apple did exactly what we thought it would do back here. They lost neckline, they hit a target. They bounced and then they hit the target secondary. You see it right there. Well, that's what happened here. It came to my target to the penny. This is pretty bizarre. 195.81. It looks like this is 195.81 or 80. Okay, so very close. But that doesn't mean it's done. So the target came early. This was really here, which means that it could double dip, which is the statement for this whole week. The indices fell off a cliff in the 5 most scariest days, Monday being the harshest day of the year, this past Monday. They bounced, and now they're halfway, and now they have to overcome Thursday and Friday of last week, the week before. So we had a scary Thursday, Friday, and a terrible Monday. We bounced hard, chopped, and now we've recovered about half, give or take. And that's the problem with the whole market. And that's here. I would not start longs in Apple is the short story on Apple. Nothing about its fundamentals. Of course, this is all about charts right now. ADM. They just reported, it looks like. These are marks I've made months ago, and we are right there on the bottom end. We're still chopping around the middle, and we're still failing at the highs. So it should hold. I don't know why it wouldn't, but if the markets takes a dive, so 57 lost. If it's lost, probably goes to 53. Okay, and Applied Materials. So let's zoom out and get a little bit more clarity. I'm not rushing into this. This is pretty boring. Great P&L, but pretty boring, and it's going into earnings. So I don't know if I should do anything right now. In fact, all of these arrows, although they were correct, I'm going to delete all of them because they're old and they don't mean anything anymore. So to me, it looks like they lost a neckline somewhere around 190 to 195, and the downside should be like $30 to $50, and it's not done falling. So here's the statement. If they're not at 204, they're probably at 160. That's what I would say. You can put it in a way like I'll put resistance up here. So if you don't get up there and hold, you're probably retesting the lows. And if you lose the 165, you're going to go lower to price out whatever you did there. I don't need it to go there. This looks like a pretty solid floor. Okay, one other comment about the whole market. So we tested them. I said it was the worst day, which is a good thing for the bulls, Monday, because it flushed out a lot of selling. A lot of scared people just ditched, and the people that are left or bought are strong hands. So it's going to take quite a bit to lose the floor. I don't think it can happen just from natural price action. Something has to intervene. That's the second part here is speculation. Okay, AMD. Once again, this is another stock that hit our target to the penny almost. So I said if not above here, then there. That's what I was saying about Applied Material. So I wouldn't want to actively short AMD at this stage because it too flushed a lot of sellers. But it's not like it's a bargain of the century. Okay, this is a company that's losing out to its main competitor that left it in the dust 10 times over. You know, it and Nvidia were neck and neck for a while as far as competing for bids on Wall Street, and now nobody talks about AMD. Everybody's focused on Nvidia. That's my comment on that part from an investment perspective, a stock perspective. Rallying into 142 to 145 would be an exit point for me. Yes, we do have a lot of support, but any rally into 145, for me, if I'm stuck long, I would use the strength to exit. If it loses 120, it goes into the 2 digits again. Yep, it's not impossible. Fundamentally, it's okay. It's not awesome, but it's okay. So AMGN, I don't know much about this whole sector. Wow. I don't have any lines on AMGN. Find that hard to believe. There we go. Clearly something happened to reprice that bad boy. So I don't know the industry. Okay, so you got to... With these, I don't trade these stocks because I'm lazy and I want stocks that are not going to surprise me. Let me define it, the lazy part. I don't want stocks that have extra volatility. And all this biotech stuff, healthcare stuff, every day is like an earnings report. You can get announcement, phase 3 trials of this, or FDA says that, or somebody, God forbid, got sick from one. Boom, the stock is up or down 20, 30, 40, 50%. I don't deal with this very well. So if you know the company and you study the financials, that's great. Up here, this is not an obvious point of entry. So it could work out, but it's not for me. The comment I made about the strong base because of the big sell-off that happened in the market, well, I can say the opposite here. Look at that huge rally. And now below the base from where they sprung into it. That's pretty bad. So I'll say it this way. As long as it's below 332, it's probably going to test the low 300s or the high 2s. Technically. I don't know that for a fact, technically. And if you lose 305, you're probably going to 280. Amazon, I am not a fan anymore. So I'm a heavy user of Amazon, and I'm a huge fan up until a couple of years ago. When the company changed hands, I don't remember exactly when, the new guy, the first earnings report, did something that Amazon has never done on my watch, which is like pay dividend or buy back stock or some ridiculous thing. And now, like, half my orders get messed up, one to a large degree. So, in fact, it's arriving, a replacement is arriving today, and I didn't order one. So I don't know what the hell's going on with that company. I would not be long here. Let me tell you why. It fell off a cliff. The middle part is above me. And I don't think this has the oomph to get through that middle part without a good headline. What is a good headline? This guy is busy paying dividends and buying back stock. He has nothing else going on. I say that very hesitantly. It is my favorite company of all time, so I would hate to rag on it. That's the deal with Amazon. 1 second. Okay, so I think there's a chance that... there's a chance that this one retests the lows it just did. And if it doesn't hold them, there's not a good chance of that. But if it doesn't hold the lows from last week, this one will be below 140. I wouldn't buy puts for it. I'm just trying to discourage people from adding new positions by buying calls. I'm okay selling a put or a put spread. I'm okay doing an iron condor. I'm not okay holding calls for no reason. That's the only thing. If I own shares, I'm not panicking out or anything. I just don't want to add risk right now. The same message I have last week. Abercrombie, if you've known me for a while, you know I have hated that ramp because the P&L does not show this warrant. And I'm going to tell you one thing about this bad boy. If it loses 120, it'll be 75. I'm just going to leave it at that. If you're an investor, ANF, please do your homework. Tell me why it's so exuberant. Why does it deserve to be leaps and bounds above last year? I mean, this, like, Nvidia doesn't even look like this, does it? exactly like this. So check out the P&L of NVIDIA and check out this P&L, and you tell me which one is worth your money more. Study the company. This is not an obvious point of entry for me, for ANF, for multiple reasons. AAPL, okay, so they bounced, hit our target, and bounced right back up. This is not an obvious entry point. I think between 78 and 80, I think it revisits the as long as it's below 80, it's probably going to retest 69 or 70 or 68. It should have support, but it may. I wouldn't hold calls. If I invested in the company down below, I would have traded out of it at 80 or 78. But if I bought an investment, I don't do anything. They are setting lower lows and lower highs, so you have to respect that. And if they do that one more time, they get to 56. Not easy looking, but that is the scenario that could happen. Okay, AVGO, I do have a question on it. Lower lows and lower highs. You see how they're all looking the same? All these stocks, the one before it and this one and the one before that, they all have this huge wick from the Monday, the worst day of the year, hands down. The NASDAQ down 5% before the market even opened. You don't see that often. So everybody flushed the low. If they cannot hold it, I don't know what's going on with this market, at least not this week. That would be surprising. So for now, they are safe from that perspective. They have buyers at 140, 138, and they have buyers at 133, and they have really strong buyers from Monday into 125. What's it going to take to lose that? So that's the one statement. P&L is solid, no earnings for 25 days. So somebody stuck in a debit call spread. It looks like they're down 17%. What are my thoughts? I just gave you my thoughts. It's a good company. I wouldn't chicken out of it. A debit call spread, I wouldn't add to it. Stick to your percentage loss. You can sell bear call spread, like create a calendar with yours, but it's not very safe. Like you can sell a credit call spread, maybe if you want to, but it gets pretty convoluted pretty quickly. So be careful with that. Bank of America. I am not a fan of banks at all. In fact, this bank should find a lot of resistance here, and I'd be shocked if it goes to 41. If it goes to 41, I would buy a put. I would exit my longs. Again, a long wick below. What's it going to take to lose that wick? If Bank of America below 34.50, and I would go like, what? What is going on? So it is not likely that we lose that wick in the next couple of weeks. I mean, what environment would that be? Let's just say it does. Do you see what I see? Breakout, floor, and you lose the floor. The downside scenario is this much, or that much below that. Let's just go with this much. I don't want to scare anybody with that much. That'd be like, what, 0? No, not quite. The old school days. And this much. So how about we say it this way? I know somebody will see that. So, I'm buying puts. Support plus. Okay. Support. But I'm telling you that if this is lost for whatever reason, remember, this is Wall Street that we're talking about. Somebody may break something somewhere. Baidu, I don't trade Chinese companies because we are blind to what's going on in China. I am. This ticker can be long for as long as it's holding the floor below. So if somebody bought longs to get a bump towards 100 as a trade, fine. You can see how it behaved well to my arrows. If this green M doesn't play out, if for whatever reason it goes below 72, I would exit violently. If you're long from the bottom and you're profiting, just trade it. You should have a lot of resistance through 91. BITO, a lot is going on. I did a video on Bitcoin yesterday. You might want to go check it out. It's on YouTube. / simple stocks. And so Bitcoin hit what I thought it would do almost perfectly. Check it out, this one. I just copied and pasted, and it did that. So entry zone 15, 16 and a half. If somebody bought the dip, good job. I would have exited if I was trading. Bitcoin, the BITO pays a lot of dividends maybe. If the traders are doing well, if Bitcoin is rising, they'll pay a lot of dividends. Sometimes they pay nothing, like 10 cents or a penny or something. So they don't owe you the dividend unless they do well. So it's worth nibbling. If somebody nibbled on BITO, fine. But now you're running into an area where Bitcoin needs to make a decision soon. I wouldn't start longs at 20. If I was a trader, I would have started at 15. I have crypto, so I didn't jump into BITO, but it was a decent entry. Up here, not so much. If it dips towards 17 or 17 and a half, I would take a nibble. A nibble meaning is just a starting position to add like 10 times to it. BMY, not 10 times as large, 10 different lots, so I can average over time. It's like gold, same idea. Exit point. If somebody didn't exit here, that somebody has ulterior motives. As a trade, this was a flat out exit, exit, exit. Okay. Now you tell me it's a cup and handle or whatever you see. Yes, but it's going to take some headlines to get through 52, I think, and 55. Into 52 and 55, it's a trading exit for me. The base is a base until it's not. Okay, let me show you proof. From this point to that point, look what happened. They dropped, consolidated, bounced, failed, and made a lower low. What if they repeat that process? What if this is the consolidation they're doing right now? Okay, just to give you an idea. This bounce could be this bounce. It's a little bigger, but the same concept, ran into huge problems, running into huge potential problems. Not a good starting point for me. Okay, BX, I said I would short it or I wouldn't touch it until it drops, and it dropped. If you bought it on the dip, great. To be honest, this chart still looks pretty darn good. If I'm not long here, I'm not adding. I think this, just like this is a solid floor, this is a solid top. So what's it going to take that top out? If they take 146 out, they go to 60, 160. It makes more sense for them to retest the support. Anything below 122, 23, 24 is solid. And as close to 116 as you can get. If you lose 116, you're going to the low 100s, if not 2 digits. CAVA, so violent, this stock. What is up with that? 11 days, you'll get an earnings report to make it more violent. I'm not sure I would want to be invested in this one. This P&L does not match this. This stock chart does not match this P&L. I know it's a relatively new company, so it's going to take a lot to take out 98 and 99. I think it's easier to get to 72 or 70. 76 is solid support. If you lose 76, you're going to 65. So go with your gut, I guess. If I'm long, I'm not adding, and I would consider waiting until after the earnings. So this one that has fallen a lot, we took a long and it didn't work. If I got assigned shares, I'm in the red. The P&L is solid. The price action is acting like PayPal back in the day, where it's falling into oblivion for no particular reason. So one can attribute the fact that they overshot and they're overshooting. They overshot on the way up, so they're overshooting on the way down. And the shares of CLH, if I own them, I would have to sell, if you haven't already, aggressive covered calls. But if it was a trade, not an investment, then consider closing at X% loss. Okay, I said I would take shares if I was looking to invest it, and it wasn't a full-size position that was in the process, in my write-up at least, if it was off of my write-up. Considering a wheel, of course, I wouldn't immediately do the wheel. Like the wheel, basically, if I got assigned shares, I would sell covered calls against my shares to put them to work to reduce my entry price. So the lower it goes, the less likely I'll be able to do that. They did fill to a degree the whatever weakness they had here. So anything lower than this does not make sense from the chart, except to the overshooting and the pendulum is swinging. If it was really an investment, you sweat a little bit, you sell a few calls, and you treat it just like any other investment. You'd be down 20%, and if you're selling, if you actually less because you made money from the sold protection, so you're down 18% roughly. And if you sell covered calls, you can recover a lot of that and build a good base for it. And if it was indeed a starter position, when you're comfortable, you can add to it to average down your price, but there's no need to add to it now. Hopefully that gives you enough. Pop into the live room, we'll talk more about it. This one, definitely not a starting point right there. I see sellers into 400, maybe buyers below 310. I wouldn't touch this, to be honest. Is this a cable company? Broadband. Okay, so yeah, I don't know. I'm not a fan. Too choppy for such a stable P&L. They're selling rallies and making lower lows. So rally, lower low. Rally, I'm asking lower low. I mean, it seems like a big drop. I wouldn't touch it here. I think it's easy enough to get to 335. Okay, oil. I don't do futures here, Jose. So pop into or ask me during the day. We can talk about that or the morning notes. So crude oil has, I just noticed, I went to filled up yesterday and gas was under $4 in California. And I didn't seek a cheap gas station. I just dove into the first Chevron I saw. So I'm thinking the U.S. pumping at record level is reducing oil prices, which could have a measurable impact on inflation soon. So don't be short this week, just in case it's measurable already. I don't know how long that's been. I don't fill up my tank often enough to know. Okay, so 78 and higher looks pretty tough to beat, and they better hold 73, otherwise they go into the 60s. I've been saying that it should be below 60, but I think OPEC pumps it to be either here or below 60. If it starts dropping, you would be shocked at how fast it loses 60. It hasn't happened in a while, but they could do it because they need to make their money. They either make it in margins or in market share. There's like a sweet spot that they can't work with. I don't know exactly what it is, but that's the spirit of it. I'll update us. So far, 72 solid support. If you lose it, down in the high 60s. I don't think we can take out 80 for a long time. Comcast. Once again, pretty boring P&L. Trades like Tesla. What's up with that? I stopped trading it. It looks very delicious until you get into it, and it's stressful as hell for no reason. Look how stable this P&L is. Why does it trade like Tesla? Why? Because it's manipulated, and you're the sucker if you're trading it. If you're an investor, do your thing. There's no information for you right here. You see that blue box? Right in the blue box in the middle. You have sellers above, hardcore sellers above, hardcore buyer below. Ping pong the range. If I'm an investor, there's nothing to do. You can start, you can exit, you can do an iron condor, whatever you want. I wouldn't do an iron condor, but you can. Okay. Conoco, that's bad. If they don't get back to 112 or 113, they're probably going to 99. It's not easy, but what's going on? Lower lows and lower highs, and they just lost the neckline. So they need to be up here to recover that neckline. Otherwise, this is possible. And if you lose this, which looks like solid support, then you come down to 98, 97. P&L is okay. I don't know what's going on with this one. Maybe Exxon is taking all the bids, and it is possible. So if you're long Conoco, you probably need to buy a put in Exxon to hedge your bet. Okay, area of interest, they almost filled it, not quite. Well, we can consider it filled. Look, they're pivoting around my line, and they lost my line. See how they did this? They pivoted around the line, and then they fell apart. Well, they need to, all of this is huge resistance above. So if they ever come up here, I would be bearish on it, like flat out bearish on it, maybe even short it. Who is this? CRM. Good company. I think it's going to take a lot to take out 267, and that's your catalyst to get you to 296 or 300. I would not go long of a stock into a stock that is going up into this kind of selling. And conversely, this is extremely solid support. For whatever reason, if they lose 227 zone, they're probably eyeing 190. That's not a forecast. I wouldn't buy puts for it. I tell you what, though, I could sell an iron condor, sell calls here, buy, well, I wouldn't do any of that. Earnings in 10 days. So put that thought on hold. I'll trade it after the earnings. If it dips, I'll go long. And if it rips, I'll wave at it and say, good job. CrowdStrike, I wouldn't touch this thing. Litigation, I have no idea. If you're an expert in the field and a lawyer or have consulted a lawyer, then you could invest in it. It could be a huge winner. I just cannot imagine that when Microsoft says this is the biggest outage of all time, that they're just going to walk away with it with just 2 weeks of selling and not more. They're tracing my white line. So I don't want anything to do with this company until you get clarity. If you have clarity, then invest in it for the long term. I would suggest you sell covered calls too. Aggressive ones. Cisco, better hold support. If you lose 44 and change, you end up in you end up, I don't know, 42, 41. 1 second. Looking at Cisco, I don't know if we commented on it or not. Anyway, there's just like a lot of things, although this one is not as inspiringly solid floor, but it is definitely, look at all the stuff they have to cut through. 3 days until earnings. I tell you what, come to me the day before they report. We'll look at the data. Maybe there's enough information to give us a heads up. I mean, the P&L is not that great. Look at the sales are dropping. Maybe it is seasonal or not. We'll check it. CVS, too violent for my taste. Look at this and look at the P&L. So clearly it's about people who know the business or not know the business, and it's about drugs, I think, healthcare or reimbursement or something, because this is crazy and not a crazy P&L. Personally, I mean, I call this escargot. Why do we eat escargot when we have better tasting food that we don't have to butter up? It's not. It's not for me. So, although it looks like it has solid support, if you lose 55 right there, I think you're in danger of losing 53, and that will get you to the high 40s, mid to high 40s. That's the worst path. If you get a headline and for some reason you break 64, you get back to a place where you're going to be hitting a brick wall. So here's the downside scenario. Here's the upside scenario. You be my guest. Not for me. And they just reported. Caesars, again, boring P&L. What's with this? These are stocks I don't touch because they're clearly manipulated and I'm on the outs. It's going to take a mountain of headlines to cut through all of this and break out from 42. So an approach to 39 to 42 is an exit plan for me. Meanwhile, solid buyers, but they better hold. I think if you lose 32.50, you're probably losing this one and ending up in the high 20s. So if I'm already long, I'm not adding. If I want to get long, I can start for the long term. This is needless. And one can say they lost a Head and Shoulders that is targeting 20 or 18. No joke. In a series of lower lows and lower highs. So this mountain of resistance might be able to make it happen, like drifting lower. Anyway, it's not a great start. It's an okay start, half position. If I wanted to go long for an investment, I would only take half of a position. Who is this? Delta Airlines. I did look at an airline, and it looked like it's okay to start. I don't think this was one of them. I have to look at it. Anyway, so here's an airline. First of all, I'm not a fan of airlines. I fly and I don't know how they can stay in business. So this one fell into a solid base. So it should provide some support. But if it's lost, it could be in the 20s because it's falling so violently. I mean, we said support and we said the downside target and they hit that, and then they're cutting through supports like it's not there. And they're beating all the potential targets handily. in a bad way. So I don't, like, who followed it up there? I know I've complained about it, and I wanted to short it, and I missed the short. The P&L is not deteriorating, but that is, whoa. It's closer to a floor than it is to a shorting position. So if somebody just nibbled long, I get it. But if somebody is adding, you better have good conviction, and you better leave room to add more. Okay, Deere. It was an entry long here, and I don't know why it hasn't popped on anybody's radar. So we're going to need tractors regardless if we're growing or not. We're going to need to grow food. This is a solid base. 4 days into earnings. So I don't know what to make of it here. It's a long-term base, but it's so old. I don't think it's reliable. I tell you what, below 320, it becomes really interesting to sell puts in. But there's never any good premium. So if it dives, I would buy in the money calls out in time instead of buying shares at that price. Maybe sell a put to buy a call if you have that kind of account. Let's talk about it closer to the earnings. Rallies into 370, I think are going to be difficult, and an exit point. DELL, I told you it was a short. Oh my gosh, was it a short? Oh my gosh, I just didn't want to short it. I'm a very simple guy. I look at a P&L like this. A stock chart like this, and then I look at the P&L to see what's it all about. And it's about nothing. It's flat as a freaking pancake. And then the stock does this. Explain that to me. That is market manipulation. This is what Wall Street makes its money from. Us idiots who chase it like this. So I wouldn't touch it from that perspective because it's manipulated. I've traded it well before. It's a better long than a short here on a chart basis, but I couldn't tell you it's not at 60 because of this weakness here. Let's say this. If the market's correct another 5 to 10%, you don't think that this one will be at 75? I think it can be. They're selling rallies. Don't trust the rallies. The target can be 112 or 108, but that area is going to be difficult to take. So there could be a bounce, and the bounce is going to encounter R1. It's going to encounter R2, and I'll give you an idea as to what they were hunting. They were probably hunting $45, which they haven't hit. So I think they want this box. Whatever I meant with this, I don't remember. Credit put spread for $1, I guess. That's why they paid $1 for the credit put spread from October. $1 for a small one like this. So that's an old comment because they knew they were coming back down to it. There are no coincidences. Wall Street is a rigged game. You just need to know the rules so you don't get rolled over. All right, Disney is a long because of fundamentals. Here's a P&L that's super stable, and look at how it's trading like the opposite of DELL on the way up. That's also crazy, but it's a matter of finding support. Sadly, there's not a lot of premium. So I would repeat something like this. So hit me up. If we don't have earnings, and we don't, let's do a trade on Disney this week if you want to. Maybe to buy shares, start with a credit put spread, and if it falls into it, just sell the protective put and take the shares and make it a starter position. Kind of like CELH, and you're thinking, hey, Nick, I lost money on it. Yeah, but if you read the write-up, it was a starting position with a buffer. So, okay, I'm down 15% on the stock. That's good and into support. It's not the end of the world, especially that I said it's a starter position. Let's say it falls another 15 or 30%, and I double down my position, then I'd be only down 15% in a really good stock at a really good level. Also, not the end of the world as an investment. As a trade, yeah, it's suboptimal. So here's the problem with this area here. Like, what's it gonna take to beat this candle? Whoops, I hit it. Okay, that's a mountain of sellers potentially, so be careful with that. And there's nothing here, no support. You look left and it's pretty old, so it's not going to be very effective. Okay, like this area is supportive, 2020, but it's pretty old. Let me put it on my to-do list. It's already on there. Okay. DraftKings, I believe they just reported and fell off a cliff. If I'm not long, I could consider longs. My only problem is that the market, like if the market continues lower, which is not a given, the way they traded last week, but if it continues lower, the support to the left may not hold. 26 may not hold. So if I'm not long, I would brave selling puts or put spreads to own shares. So I'll put it on my to-do list. It is in my target. This was, I said support, and if lost, they go into my target. Now the blue is a lot of sellers. So the one thing I would not do is buy calls. Well, that's the one thing that will get you the most profits the quickest, but it's the one that where you have the most conviction, and I don't. So I would rather split my risk instead of just buying calls or call spreads, sell some fear below, and with that buy some calls if you insist. Dexcom, nobody's explained it to me. I've asked everybody that trades the stock when you were asking about it on the way up. On the way down, I said, what changed that they gave it a haircut of 40%? The report was not bad. Something in the report changed the 40%. I don't have time to go find out what. If you know the stock, reach out to me so we can go long. Because that was a beautiful thing to go long if you knew what was going on. I don't know what was going on. I know that it's super cheap. It's a growth company. Price to sales of 11, look what resulted. Price to sales of 11, look what came out. Price to sales of 7. It's air math, 40% cheaper now than it was here and here. And look what happened those two times. What I'm saying is if you want to spend a few minutes, find out what was the catalyst. How did they explain the drop of 40% on a P&L that doesn't look marred? If you can give me that explanation, we can go long and make some money off of it. So if you know it, go long with a stop. Go half position, and if it falls to 28, take the other half. This is a strong growth company. So nice, consistent P&L. They must have forecasted a cut in sales or something. So look into it and come back to me. When I was having a beef with ANF, this one was trading like ANF. I'm going to tell you something. If it loses 150, I think it goes below 100, or at least approaches it. This needs to price out to the downside. So let's just say it goes to 110. Okay. I don't know what these are. Did it split or something? These arrows look like they're going to nowhere, so we will take them out of there. Okay. If it doesn't take out 190, it's probably going to lose 150, and it's probably going to go to 115. So I would short rallies. If there are no earnings, I may be even sell a call spread to buy a put spread. Do I want to do that? I don't know. I'm gonna put it on my watch list. Nick, I'm a glutton for punishment. So maybe on a green day, I would sell a call spread and buy a put spread. I think it wants to lose 150. I don't have evidence, but I think it wants to. Maybe an approach of 174 or here, and then pops into here. This is anything above 190. It would be very, very interesting to get out or short it. Enphase, I'm walking away. I don't know why are people still involved in Enphase. Maybe you can reach out and educate me. I'm looking at very simple man, right? Look at the P&L. They got cut in more than half in sales. How do you explain that? And how do you figure it's going to make money going forward? It's gone down to virtually nothing. This next, the 24 bar is going to be, what is going on? Yeah, no, thank you. So something is amiss. Okay, let's go to the sales line. 2 billion, 1.3, 2 billion, 2.3, 2.3, and now you're back to 1.4. So you've dropped 0.7 off of your run rate, and nobody's concerned? Yeah, not for me. Not for me. That is alarming. So I think they should be down here somewhere. You've known me. I've covered this, and we've gone long a few times and made money, but it wasn't easy. I wouldn't touch it right now. And look at these circles. Look, 3 circles. You can draw on one here. I said R. It failed exactly in my R. You can repeat that. So any of these circles, you can draw the same circle back. The whole region. Just look left. Look left. Meaning it has not been good. So if you take out 144, yeah, you can go to 180. Why would you do that with this P&L? There's no way anyone can explain that to me. And if it does, I would short it. I would just buy a simple put. Okay, energy transfer partner. Yeah, I don't understand this. I think this is a REIT or a dividend payer or something. Okay, technically above 16.5, you have $1, and then you have a solid buyer $1 below. So there's not much to do. I mean, there's a possibility you're at 14.50, but it's probably with a bad stock market. I don't know what the question is there. I don't trade anything from Grayscale, just so you guys know. I've had no luck with it, and I've heard some pretty bad things about it, but they've been here for a while. Not this one, not the BTCE, whatever that other one is called. I don't touch it. My concern in crypto is from Ethereum. Okay, Ether is warning signs a little bit louder than the other ones that I track. So be careful on Bitcoin because of what this one is saying. I'll tell you, this chart is going to be difficult for it to take out 26. This is a problem. Okay, so what if they lose this first? Then they go at least this much down, and I'm being generous. So you can see Ether down quite a bit, probably 20 to 30%, if not more, if it doesn't recover above its current resistance, because crypto doesn't stay stagnant. It's either rallying up or rallying down, and I think down is low. Is this an Ether? Yeah. I think down is easier. So that's my thought on Grayscale. But it's really the thought on Ethereum, which is the thought on Bitcoin as well. Copper, that was interesting. I would have gone long if I knew a lot about copper. In fact, I did ask. So this is a solid base. So I think I added it to my watch list. I did. A starting long position, that's fine with me. Starting, like I should leave room to double. And I would double below 30 if it goes there. If not, then I have a good entry for the long term. I don't know if it has enough to sell puts in it. But that would be one way. Sell puts, buy in the money calls. First Solar. I wouldn't touch anything in that whole industry. But if I did, this would be the stock. So be careful what you do with it as far as investment and trading. If you don't have good skills, look how constant it repeats. Solid support below. The zone extends from 190 or lower. So you're not at a floor, but there's a floor below you. And if you go above 232, maybe you can get another $30 out of it. I think there's a chance it drifts lower, not collapses or anything. Look how crazy the P&L is. So this, I would understand why the chart is crazy, because the P&L is crazy. I think they have a lot of subsidy. I don't know if they still do or not, but this would be the stock I would bet on if I'm into solar. I'm not. It's like worse than biotech. Again, I don't want question marks. I'm not here to say, yay, I made money off of that exciting stock. I'm here to make money easily without a lot of risk, and those stocks are not. If you ask me on GE, I would short it like with conviction, because I believe that this stock is garbage, to be honest. First of all, we don't know what's in it anymore. They chopped it up and sold it off to pieces, and that's why it was rallying. Every time it sold off a piece, whee! It's like a nice house selling pieces of itself. And then you still say it's still the same old house. It isn't. So make sure you learn what's inside. The sales are falling off a cliff. Now, in my experience, whenever they carve out a company, they carve out the sales backwards too. So it's not like, oh, it had 4 companies worth of sales and now it's only 1. I don't think so. I mean, if I was an accountant, I would have to carve off everything. That's how we did it. when I was in the industry way back then. So I don't know what the rules are now. Look into it. Technically speaking, okay, this is a 2008 level, 2007 financial collapse level. Back then it had a bank, GE Healthcare, GE something. I forgot, GE, the leasing arm of GE. Anyway, so we're back into it. Now people want to go long. Okay. I'm short, but I gave up on buying puts. I shorted it, I don't know, months ago via a sold call for the end of the year. And it is making money very slowly, but that takes out the itch for me to do anything more than that. So I'm cautioning you more so than I'm saying short it. I'm cautioning you to be all excited about it. And this is a reverse split stock, by the way. I forgot how many times, 8 times. So it's not really $150. It's like a much lower price. They reverse split it to make it sound fancy. It's not for me. If GE loses 150, it's probably 128. Okay, that's what it is. One second. Okay, so enough ragging on GE. General Mills. Solid P&L, again, where's the mystery? How is this stock so flexible? I think there's a lot of resistance above. It could creep back up to 71 or 72, but if it does, it probably drifts back down to 65 or 67. So this here is not an obvious starting point. If you want it cheaper, you can pick it up maybe $2 cheaper in the next couple of weeks. Patience. This is a solid seller, and I can understand why. 70. Huge resistance. It should be like a lot of resistance up here. I know these are ugly marks and they're not surgical, but trust me, have I ever steered you wrong like this? With the marker, I think this is support and probably a target. Support / target. So no reason to panic inside of a trade. If I have something, I'm not rushing to change it. Gold. Okay, so I'm betting that we don't make another high on this run. Gold got a shot in the arm when the market freaked out, and that basically says, because of everything I said about how solid of a floor there is below the market, this is how solid of a wall there is above here. That's silly statement, but these. So look, potential target and support. Boom, right into it, bounced, resistance. So I'm going to go with my own advice and say that that's what's going on. So anything above here is also resistance. So I love these lines. I'm going to copy them and make them all global. Okay, so shorter term, if you want more. 227 I think is difficult. 226 and 27 are difficult. It's easier to get to 222. And with that, we end the first video. We'll stop